All right, so if you know everything on this review sheet and the part 2 that we're going to do later, you shouldn't have any problems with the exam. I'm not out to try to trick you. The only thing on that I will say, it's not a trick, but it does make it a little bit more complicated. And I do that because that's how it is in real life, is when you're doing the second part of the exam, where you're actually filling in the 941 or the payroll, pay attention to the number of employees and when they worked. That's the key. And also when you're doing the payroll project, because like with the payroll project on the final, I'm going to have it to where the last part, I'm going to give you the payroll register for say December, but one of the employees will have been terminated in November or one of the months. And so you're still going to have to record for that individual's taxes that were taken out prior in October and November, perhaps, or if it was 940 for the entire year. I'll also have a situation where an employee was added on late in the year. So you'll have to remember to take their wages at when they started, not assume it's a full 12 months. And the same with the person that was terminated. It's going to be easy to skip over that and think, oh, they worked all 12 months and they worked this month. Or if you see the December payroll register and they have nothing there, then you think, oh, well, they didn't work. So it'd be zero. But that's not the case because they worked up through November. So that's the only little tricky part that I tried to put in as real life as possible. The rest of it, when we go through this, if you know it, you should be pretty good for the test. Okay, so let's go through these and hopefully let's take the first. I'm going to give you. Let's take 5 minutes, and I'll pause the recording. I want you to answer at least through the first 5, and it'd be nice if we had people to, I don't know how that'll work. I don't know how much interaction to do. I'll probably just go through the answers, but I want you to think about these before I just start spitting out the answers, because I think that's what's going to really help you get it down and memorized. So let's see how you do. I'll pause the recording for about 5 minutes. All right, let's go through what hopefully you had for the first 5. Which form is used to report the federal income tax and the Fica taxes? Okay, so hopefully we know that that's form 941. And we've done that now since module 3, form 941. And how often is it done in 941? Well, that's done quarterly. How often are the federal income taxes and the FICA taxes deposited by the employer? Well, they are done typically every month, or they're done bi-weekly. Which bi-weekly, remember, that means every other week. Bi means 2, so every other. Semi means cut in half. So semi-monthly would be twice a month. So people I can't think of a time when people are paid semi-weekly. That would be weird. You'd be paid like on a Wednesday and Friday. So the taxes are deposited either bi-weekly or monthly. And then what determines this? Remember, that's the look-back period. The look-back period is for an entire year. It goes back to the most previous June 30th, and then retreats back to that even prior back to July 1. So it's a July 1 through June 30th span. And then the cutoff is the $50,000 mark. If you had collected $50,000 between yourself, the employer, and your employee, all of the money that's been taken in, then if you are over 50,000, you are bi-weekly. If you're under 50,000, you are monthly. And then remember what happens if you make 100,000, or not make, but if you have collected and have ready to go 100,000 in payroll taxes at any one time, they're due the next day. And that automatically then makes you a biweekly participant. Because when you start out as a new employer, you automatically start out as a monthly because you don't have a look back period. But then you could switch pretty quickly to a biweekly if you are a new company and you're pretty big already. All right, the form used to report feuded taxes. So the two forms I really expect you to know going out of this class. If you don't take much more away out of it, you should know how to do a payroll register. You should know how to set up Excel. You should definitely know the two forms, 941 and then this one, 940. How often is it reported? Remember, that's an annual form. We only have to do that once a year. How often are feuded taxes deposited by the employer? Well, typically they are done quarterly, but you have to calculate the liability every quarter. But then if that liability doesn't exceed 500 total from any previous quarters as well, then you don't have to pay. You have to make your payment after it hits the $500 mark in total for that year, or for sure by the end of the year when you file your 940, you have to make a payment. All right, what counts as taxable wages for FICA purposes? I pulled this up. This was from our module 2. And let's come down here to the FICA taxes, our wages. This is what's typically common. The items that are taxed. So even items like bonuses or commissions are definitely taxed. Tips are taxed. If you make on-call pay or overtime pay, yep, all of that is taxed. Vacation time, when you actually get paid and you're not actually going into work, but you still get paid, yes, that's still taxed. A few of the items to remember that are not taxed, and these are items that are outside of the normal cafeteria plan. Remember, cafeteria plan means those items that are specifically allowed by law that you can take out of your check and that, again, aren't taxed, such as your flexible spending account, your FSA, your health savings account, your HSA, so money put away to pay for medical bills, money put away and paid for your medical premiums. Those are part of a cafeteria plan. These are outside of that cafeteria plan. If you get a gift and it's in a qualified plan at your work has something set up and you've worked there for 20 years and you get a nice little token, say it was worth $250, then that's not taxed. There are a few exceptions. And the rule is it can go up to as much as $1,600 and not be taxable. If the employer has a qualified plan set up, they have to go through a few paperwork things, but they can set up a qualified plan. And then if they reimburse you or they give you some items to wear or to use, those wouldn't be taxable either. So that's just a few of the items that are taxable for FICA and for federal. What is the major withholding? What major withholding should say is different for FICA and federal withholding? The major withholding that differs, remember, is the 401k. The 401k, you're not going to pay tax on that for federal income tax. So your federal income tax is going to be lower because of your 401k or retirement plan that you have. Because you're going to pay tax on that when you retire and you take money back out. Then you're going to pay tax. You're going to pay tax on that money and the earnings that you have made. So for FICA, you are taxed for 401k withholdings. That's the bad part. You don't have the money to pay it because it was taken out and put into your 401k pot. but you still have to pay the tax on it because they're not going to tax you later in the year. Not later in the year, later in your life when you take it back out. You only pay federal income tax at that later point. Okay, number 5 here, what is the FLSA? First thing to know what that means is to know what it stands for. Fair Labor Standards Act. Fair Labor Standards Act, and I have that here also in module 2. Basically, it grants certain rights to employees that they can't be fully taken advantage of. But the biggest thing, you get paid overtime with FLSA. That's one of the big ones. There's no discrimination when hiring or working based on anything really. The employer is covered. Remember we had this when we talked about our vet clinic and the vet tech. So in the vet tech with the discussion board, basically I was looking at would a veterinary's office have 2 people working in interstate commerce that deal with anything that comes across states? And the answer is yeah. They deal with medicines that would come across states. That's the biggie. Probably not their clientele. Their clientele probably come within the town, but they deal with medicine quite a bit. Would a veterinary clinic have a gross sales of at least 500,000? And I had stated that they have 5 vets. Yep, they're going to have gross sales because each vet gets paid at least probably 75 or 80 grand. And then they're going to pay all the techs and the office workers. So they're going to have gross sales of at least 500,000 with 5 vets. So they would meet that those 2 criteria. And then the overtime. And then we had talked about would they get for overtime. And the answer was yes, because the rights set forth by the Fair Labor Standard Act. Let's come down. Here that is. The vet tech would not be exempt because they're not an executive. They wouldn't be able to hire or manage people. They are not administrative. Typically, they are the manual labor who actually work on the animals along with the vet. They're not a professional degree, even though you can get an associate's type degree. I don't know if it's an associate's. It's more like a technical certificate. You can get good training to be a vet tech. For some vet techs, though, it's not required. Not all vets require it. And vet techs are not going to be making more than the vets, so they're not the highly paid either. So they would be required the overtime. We didn't cover this one. This was just part of the reading that you had way back in module 1, but just briefly go through the I-9. That's what you fill out when you first start working, and that's a big proof of who you are. So it has to be filed within 3 days of your first day on the job. And then what documents? Usually when you see this I-9, think of there's like a left-hand column, column A, and then on the right side of the paper, there's column B and C. At least that's how it used to be. I haven't seen one in a couple years. So the left-hand side would be, you only have to have one of those items to prove you and who you are and that you're a legal resident in the US, and that constitutes usually a passport is the most common one. As a passport, you have to have lots of fancy things anyway to go get a passport. Or if you don't have a passport, you can do column B and C. You can have one of each, so like a birth certificate and a driver's license or a social security card. And then there were other items. Basically, again, that is to prove that you are eligible to work in the US.